On July 24th, millions of people in China are about to lose access to something they've traded for years. Not stocks, not crypto, gold. Their biggest banks, ICBC, China Construction Bank, half a dozen others, are all flipping the switch off on the same day. Officially, they're calling it investor protection. Unofficially, I think China just quietly declared war on how the entire world prices gold. And if I'm right, it's going to blow $1 trillion hole straight through the US government's balance sheet. Let me show you why. Picture this. You've got a buddy, let's call him Andrei, and Andrei owns one seriously rare Pokemon card, one copy, sitting in his safe. Andrei writes up a little slip of paper that says this certificate entitles the bearer to one card. He sells it to you. You're thrilled. You don't even want the actual card. Too risky to hold. What if it gets stolen? So you just keep the paper. It trades hands just like the real thing would. Now here's the problem. Andrei notices you never actually show up to collect your card. So he writes a second certificate, sells it to someone else, then a third, a 10th. Now there are 10 people walking around convinced they own a piece of that card, but there's still only one card. That's it. That's the whole scheme in a nutshell. And it's also, allegedly, exactly how the global gold market has worked for the last 50 years. Here's the part that should bother you. Nobody, not the banks, not the regulators, actually knows how many paper certificates for gold exist versus how much real physical metal is sitting in vaults. So what happens the day everyone shows up at once and asks for their card? Stick with me because China just made the first move in a plan that answers exactly that question, and it involves shutting down speculation, building a new gold vault the size of a small city, and exposing a number the US government has been sitting on since 1973. We'll get to that number. It's a doozy. Let's start with what actually happened. In May of this year, gold was flying. It hit an all-time high above $5,500 an ounce. Then it came crashing back down, and now it's sitting around $4,000. A 28% drop from the peak. China's response? Jack up the margin requirements, the collateral you need to put up to trade gold on credit, to 140%. That's a record. Translation, you now need more money as collateral than the trade is even worth. That's not a small tweak. That's a door slamming shut. And it's not just ICBC. Postal Savings Bank of China went first. Then Ping An, then China Guangfa Bank. One after another, China's largest financial institutions are all pulling retail investors out of paper gold trading, all landing on the same July 24th deadline. The official line, they're protecting regular people from volatility. Fair enough, gold has been a roller coaster, but look at what they're actually banning. Not gold ownership. You can still walk into a shop and buy a gold bar tomorrow. What they're banning is leveraged paper contracts. The bets, the side action, the stuff that never touches a single physical bar. If you wanted regular price discovery, the real supply and demand of an asset, the first thing you do is clear the casino floor of people gambling on price with paper that isn't backed by anything. That's exactly what's happening here. And if this theory holds up, you'd expect to see China and other central banks quietly stockpiling actual gold behind the scenes. So let's check. In May, China's central bank bought 163 tons of gold, the most in over a year. And globally, central banks bought 244 tons in the first quarter alone, the strongest first quarter on record. They've now bought more than 200 tons in 10 of the last 11 quarters. Here's the kicker. A lot of that buying was never even officially disclosed. The World Gold Council's own numbers include estimated undisclosed purchases. Gold banks are buying and just not reporting. Some estimates put the real total at up to 10 times higher than what's publicly announced, especially out of China. So what are they selling to fund all this gold buying? US Treasury bonds. For decades, the deal was simple. Countries take their extra dollars, park them in US debt, collect a little interest, everybody's happy. China has been quietly reversing that, dumping hundreds of billions in treasuries and rotating the proceeds into gold, slowly enough that they don't crash their own remaining holdings. Think about how strange that trade actually is. You're swapping an asset that pays you interest for one that pays you nothing. You only make that trade if you've stopped trusting the promise behind the paper. So here's the mystery solved. China isn't just protecting retail investors from a volatile market. They're building a completely separate financial system. One where gold gets physically delivered instead of endlessly re-promised on paper. Shanghai becomes the vault and the price setter. Built on real physical delivery, Hong Kong becomes the front door because China's capital controls keep foreign money out of Shanghai directly. Hong Kong lets the rest of the world trade against that price, and Hong Kong isn't playing small. It's scaling its gold vault capacity roughly 10x, from around 200 tons up toward 2,000. You don't build a vault that big for a paper casino. You build it because you're planning to actually move metal. Why does any of this matter to the US? Because on the US government's own books, its gold reserves, somewhere around 8,000 tons, are still valued at $42 an ounce. That price was set by law in 1973 and never updated. At today's price, near $4,000 an ounce, that's the difference between an $11 billion asset on paper and something closer to $1 trillion in reality. That gap doesn't stay hidden forever. If the world moves toward real price discovery instead of paper pricing, that $42 number becomes impossible to justify, and whoever's holding real gold when that number gets rewritten comes out way ahead. Bottom line, while everyone's watching stock tickers, China just quietly started building the plumbing for a gold-backed alternative to the dollar system. And the US is sitting on $1 trillion accounting fiction that won't stay quiet much longer. If you found this breakdown helpful, make sure to hit that subscribe button so you don't miss our next market update. Thanks for watching, invest wisely, and I'll see you in the next video. Take care.